Alright folks, buckle up, because today we're diving into a potentially terrifying scenario for Nvidia. Forget the hype, forget the trillion-dollar valuation. What if the AI party is about to end? What if the very foundation Nvidia's built its empire on is about to crumble? We're talking worst-case scenario, the kind of thing that keeps investors up at night. Is Nvidia's stock about to crash? Let's find out. Okay, so let's paint the picture. Imagine a world where AI models don't need massive amounts of computing power to be effective. Think smaller, faster, cheaper. The immediate impact, level 1, is a direct hit to Nvidia. We're talking stock price decline, potentially a significant one. Investors get nervous, they start selling, and the price goes south. Simultaneously, demand for Nvidia's high-powered, super expensive GPUs starts to fall as companies explore these more efficient alternatives. This directly impacts Nvidia's revenue and, of course, their profitability. Think of it like this. The sports car market collapses because everyone suddenly wants electric scooters. Now, level 2. This is where things get really interesting. If this trend of cheaper, more efficient AI models continues, it could lead to a massive shift in the entire AI accelerator market. Competitors like AMD, Intel, even smaller startups, smell blood in the water. They start aggressively targeting the market with GPUs that offer good performance at a lower price point. We could see price wars, a commoditization of the AI accelerator market, squeezing margins for everyone, including Nvidia. And get this, it could also pave the way for completely new types of specialized hardware, optimized for these efficient AI models, further disrupting the landscape. It's like the smartphone market. Remember when everyone thought BlackBerry would dominate forever? Things change fast. Think about it. If smaller companies can achieve similar AI performance with less expensive hardware, they suddenly have a huge advantage. They can innovate faster, experiment more freely, and disrupt the established order. This isn't just about Nvidia losing market share. It's about a fundamental shift in the power dynamics of the AI industry. And finally, level 3. This is the big one. Large tech companies, the ones that have poured billions into massive AI data centers based on Nvidia's hardware, they start to question everything. If AI model performance plateaus despite all that computing power, they might scale back their investments in new data centers. They might look for ways to optimize their existing infrastructure for cost effectiveness. This could trigger a slowdown in the growth of the entire data center market. Imagine building a massive highway system only to discover that everyone is using bikes. It's a huge waste of resources. Now, let's zoom out and look at the adjacent industries. First up, cloud computing. Cloud providers like AWS, Azure, and GCP, who offer AI services based on Nvidia's GPUs, could see a decrease in demand for their high-performance computing instances. This would directly impact their revenue from AI-related services. They're basically renting out Nvidia's power, and if that power becomes less valuable, their business suffers. It's like the oil industry. If everyone switches to solar, oil companies are in trouble. But it doesn't stop there. If the trend toward efficient AI models accelerates, cloud providers might need to completely rethink their infrastructure. They might invest in a wider range of hardware options, including lower-powered GPUs, CPUs, and specialized AI accelerators. This could lead to a more diverse and flexible cloud computing landscape, but it also means significant investments and a period of uncertainty. They have to adapt or die, just like any other business. Think about the possibilities. We could see a surge in specialized AI hardware designed for specific tasks, like image recognition or natural language processing. This would create new opportunities for innovation and competition, and it could lead to even more efficient and powerful AI systems. It's like the evolution of computers, from giant mainframes to powerful laptops and smartphones. And finally, the big tech companies themselves. If they determine that pouring more money into AI data centers isn't yielding significant improvements in AI model performance, they might reallocate their R&D budgets to other areas. This could include investments in alternative AI approaches, like neuromorphic computing or quantum computing. It could also lead to increased investment in other emerging technologies outside of AI. They might decide that the AI gold rush is over and it's time to explore new frontiers. Now, let's talk about the bigger picture, the socio-economic impact. Cheaper and more efficient AI models could democratize access to AI technology. Smaller businesses and organizations that previously couldn't afford to train or run complex AI models could now leverage AI for a variety of applications, increasing productivity and innovation. This is huge. It could level the playing field and unleash a wave of creativity and entrepreneurship. This increased accessibility of AI could lead to wider adoption of AI applications across various industries, including healthcare, education, finance, and manufacturing. This could result in significant improvements in efficiency, productivity, and decision-making. Imagine AI-powered doctors diagnosing diseases more accurately, AI-driven teachers personalizing education for each student, and AI-powered financial advisors helping everyone achieve their financial goals. The possibilities are endless. We're talking about a potential revolution in every industry. AI could automate mundane tasks, freeing up human workers to focus on more creative and strategic work. It could also lead to the development of new products and services that we can't even imagine today. This isn't just about making things more efficient, it's about fundamentally changing the way we live and work. But there's a dark side to all this. While AI can create new jobs, it also has the potential to displace workers in certain industries. If AI becomes more capable and widely adopted, it could automate tasks currently performed by humans, leading to job losses. This would necessitate investments in reskilling and upskilling programs to help workers adapt to the changing job market. We need to be prepared for this and ensure that everyone has the opportunity to participate in the AI-powered economy. All right, let's break down the specific risks to Nvidia, as outlined in the article. First, the technology risks. The emergence of AI models like DeepSeeks, which are supposedly cheaper to train and run while still being competitive, directly challenges Nvidia's dominance. If advanced AI can be achieved without massive computational power, the demand for Nvidia's expensive GPUs could plummet. And then there's the performance ceiling. The article suggests that AI models may be reaching a limit in their capabilities. If throwing more computing power at AI models doesn't yield significant improvements, the core assumption driving demand for high-end AI accelerators will be invalidated. It's like hitting a wall. No matter how much you push, you can't go any faster. A crucial point: AI models are potentially exhausting the available data used to train them. This means that newer models aren't showing significant performance improvements compared to older ones, despite using more computing power. If this trend continues, the demand for ever more powerful GPUs will diminish, directly impacting Nvidia's sales. Now, the business risks. Nvidia's sky-high valuation, over $3 trillion, is based on the continued growth and increasing computational demands of the AI industry. If the technology risks materialize, this valuation is completely unsustainable, and a significant correction is almost inevitable. The biggest business risk is a sharp decline in demand for Nvidia's data center GPUs. This could result from cheaper AI models, a lack of performance improvements, or both, ultimately leading to a bursting of the AI bubble. It's like a house of cards. If one card falls, the whole thing collapses. Let's be honest. Nvidia's valuation is based on incredibly optimistic assumptions about the future of AI. If those assumptions prove to be wrong, the stock could be in for a very rough ride. Investors need to be aware of these risks and make sure they're not overexposed to Nvidia's stock. It's not about being a pessimist. It's about being realistic. Competition is also a major concern. The development from DeepSeek and others demonstrates that there are competitors who can train AI models at a much lower cost. Even if Nvidia retains its technological lead, it may have to lower prices to remain competitive, significantly impacting its profitability. Finally, tech giants are investing billions in AI data centers. If the AI bubble bursts, these companies may never recoup their investments, leading to further market instability. It's a high-stakes game, and the risks are very real. The article raises a critical ethical point. LLMs essentially only predict the next token in a sequence. This suggests they lack true reasoning capabilities and instead create an illusion of reasoning. While this isn't a direct financial risk to Nvidia, it does highlight a fundamental limitation of current AI technology, which could eventually impact its long-term viability and public perception. So, what's the core threat to Nvidia? It's not just about cheaper AI models, and it's not just about diminishing returns on computational power. It's the combination of both. This perfect storm could undermine the fundamental assumptions driving the company's growth and valuation. It's like a double whammy, a one-two punch that could knock Nvidia off its pedestal. Ultimately, the future of Nvidia is uncertain. While the company has a strong position in the AI market, it faces significant challenges. Cheaper AI models, diminishing returns on compute, and increasing competition all pose a threat to its dominance. Investors need to carefully weigh these risks before investing in Nvidia's stock. This isn't a doomsday prediction, but it's a reality check. The AI revolution is far from over, but the landscape is constantly changing, and Nvidia needs to adapt to survive. Are you prepared for the possibility of an Nvidia stock crash? Let me know your thoughts in the comments below. And don't forget to like and subscribe for more in-depth analysis of the tech industry.